absolutely. Thanks, David. Wow. I should end now because that's as good as it's going to get. That's a great introduction. So I got my graduate degree in Manhattan, and I was sitting in a investment banking tax factors class with one of the top tax experts in New York City. And he spent the entire class, an hour, talking about the difference between tax avoidance and tax evasion. And he spent the entire class, and he was pretty intimidating, knew his stuff very well. At the end of the class, he said, "Can one of you students succinctly explain to me the difference between tax avoidance and tax evasion?" And everybody got quiet, and then one guy in the back raised his hand. He said, "I think the difference between tax avoidance and tax evasion is jail." Yes. So we're not talking about tax evasion today. We're going to talk a little bit about some strategies that you can implement if you're a business owner or have business expenses, so that you can keep more of your money or allocate that money to things that can help you in your business. And one specific element is Section 179 of the tax code. Now, let me preface all of this. I am not a CPA. I'm not a tax guy. So anything, don't ever come back to me. I don't want Mehdi to come over and say, "Hey, you said that I could do this, and now the IRS is banging on my door. So can you please come explain to them what you explained to me?" That is not the purpose of today. The purpose is just to highlight some things that you can go talk to your tax professional about, or if you don't have one, we have a number of relationships that we can introduce you to, so you can start having these conversations. I was talking to some folks over here that most accountants will ask you in January for you to tell them what happened. So they are mostly historical looking, what happened in the past, and then they'll do their analysis and then tell you what you owe. We like to have those conversations in October when you still have time to do something about that tax liability. And in most businesses, so we're talking about anybody that has a business, whether it's LLC, S Corp, C Corp, sole proprietorship, and you have specific business expenses. And when you buy something, some equipment, a tangible asset, you can depreciate it. Basically, the idea is that if you buy something, over time it loses value. So that's the depreciation, and you can offset income with that depreciation on an annual basis. And the IRS has tables, whether it's straight line depreciation or modified, accelerated cost reduction makers. There's different how you can depreciate certain things. So something you can depreciate over 20 years, something you depreciate over 5, 10. Vehicles have a straight line 5-year depreciation if it's for business use. So you can depreciate it over 5 years. So if you have a $100,000 car, you can depreciate $20,000 a year from the business expense or the business income. Section 179, which I think you've got kind of a short little write-up that we put together for the dealership here that highlights what Section 179. So there's two elements to this. Section 179, again, is an accelerated depreciation. And then you have bonus depreciation. So these are two separate things. Section 179 says that you can depreciate up to a little over $1.1 million a year of business assets. These are tangible assets, things like equipment, in some cases, building improvements, so tangible assets. When it comes to vehicles, it's a little bit different. So that 1.1 million cap changes a little bit when you get to Section 179 depreciation. Again, it's accelerated. So you still have straight line depreciation on an asset, but if you use Section 179, now you get to accelerate, meaning you get to bring it all up into the first year, that depreciation. When we're talking about vehicles, the IRS says there's 3 classes of vehicles. Vehicles that are under 6,000 pounds, gross volume weight, vehicles that are over 6,000 but under 14,000, and then those that are over 14,000. So if it's over 14,000, you're talking about buses and semis and other vehicles that it's very clear that it has a specific business use. When you talk about under 6,000, that's a passenger vehicle in terms of the IRS. And it's also, when you'll see in the code, it'll talk about luxury vehicles. There's no specific designation. It's just basically anything that's under 6,000 pounds. From the IRS, that's a luxury vehicle. And what that allows you to do in that category, the maximum you can deduct for this year is $28,000 or $20,200. So that doesn't sound like a lot. So the IRS said, okay, well, or back in 2017 when they passed some tax cuts, they said, hey, we really want some business investment. So we're going to keep Section 179, but we're going to add this element called bonus depreciation. And for a number of years, the bonus depreciation was 100%. So that meant that if you bought a piece of equipment in the year that you bought it and put it in service, you could depreciate 100% of that cost in 1 year. So say a business had a great year, a couple $1 million in revenue. They say, hey, well, we're going to have to buy new cars or new equipment anyway. Let's do it now because we can offset our income this year by buying the equipment we might buy in a year 2 or year 3. We can accelerate it and depreciate 100% of it this year. Nicely, you get both. You can take Section 179 depreciation. In this case, when we talk about passenger vehicles at 28 or 20,800, but then you can also take bonus depreciation. So you kind of get both. The bonus depreciation goes away. So last year, in 2022, the bonus depreciation was at 100%. 2023, it's 80%. I was talking to somebody else before, they're like, well, still, crap, I'll still take 80%. That sounds great. But then it goes to 60, and then to 40, and then to 20, and then to 0. So every year from going forward, it's ultimately going to go to 0. So that's why we want to take advantage of this tax cuts, because in our view, taxes are going up. Because one of two things has to happen. Either Congress has to stop spending so much, or taxes are going to go up. I know where I'm placing my bets. So you want to start looking at your specific tax situation, and can I start taking advantage of some of these things so that I can utilize the tax code for being more tax efficient, not tax evasion. I want to avoid jail at all costs. I hear it's terrible. So when you think about Section 179 or the bonus depreciation, and specifically when you start looking at these types of beautiful vehicles, 80% depreciation, there is no cap on that. If you're taking Section 179, that's that $20,800 cap. There's a cap. When you talk about the accelerated bonus depreciation, 80%, there's no cap. The other nice thing about it is on the bonus depreciation, well, so for Section 179, you have to have income up to $20,800, right? If your company lost money for that year, at least from a tax standpoint, and you want to take Section 179, you can only take it up to the amount of revenue that the business generated. Bonus depreciation doesn't have that. So you can actually go negative and have a loss with your business if you're using bonus depreciation. Section 179, you can't do that. Bonus depreciation you can, so that's an added benefit that you can actually wipe out a significant amount of taxable income by using bonus depreciation. So the idea is to look at these tax benefits and how they can be helpful to you in running your business. So understanding how the IRS looks at business, you might say, well, I use this car sometimes for business, but sometimes I use it for personal. As long as you use it for 50% business, you can take advantage of some of these benefits. Now you have to prorate it, right? So if I use it for 80% for business, then you get the 80%, let me use a different number. So use it 70% for business, then you can take advantage of these business deductions up to 70%. So make sure in business use is, can be things like, hey, I've got to take, if I'm in real estate, I've got to take clients around and show them houses. If you're moving people around for any other type of business activity, those things all count. But again, I'm not a CPA. I am not your tax accountant. So sit down with your tax professional, really work through, does this apply to me and how can I utilize this to accelerate the depreciation? The other thing is you think about this, you actually get a third benefit or third depreciation, which is the straight line depreciation. So you can take Section 179, you can take the bonus depreciation, and then because vehicles get depreciated over 5 years, then you take the straight line. So let's say you took the bonus depreciation, you took the Section 179, but there was still $100,000 of value still left that you weren't able to depreciate. Well, you divide that $100,000 by 5 years, you get $20,000. You add that on top of the Section 179, the bonus depreciation, and then the straight line depreciation. So utilizing these types of strategies can really help you still get the business assets that you need, but also making sure you're taking advantage of the tax benefits that are out there. This is not like some unique Cayman Islands type of strategy that we came up with, right? This is legit. This is, tax efficiency, not tax evasion, right? So we want to make sure we understand these things to whether they apply to you or not. Now, as you start to run your business, you might think, well, maybe I could use a vehicle to move people around, right? And start to think about how I can have potentially the IRS pay for part of these business expenses legitimate business expenses that I have. When I was early on in my career, I went to my tax accountant and I said, hey, this is going to be a really good year. How do I pay less in taxes? And without even thinking, just right off the cuff, he said, make less money. I said, well, that's not going to happen. So I changed accountants because he didn't fully understand what my goal was, right? My goal was not to make less money so I pay less taxes. My goal was to make more money and pay less taxes. So it's important when you think about an advisor, whether it's a tax advisor or a wealth advisor, you want to make sure they understand what your goals are. What are you trying to do with the resources that you have so they can give you the best advice to accomplish your goals? Because in the grand scheme of things, money is just not that important. I know, blasphemy coming from a wealth advisor, right? But money's only significant to the extent that it helps you do the things that are important to you. And that's what we do at TM Wealth Management. We sit down with each client and really understand specifically what is it that they are trying to have their financial resources do for them, right? Money's a tool. We've got to know what job we want this tool to do for you. And then we look at everything that's available to us, from tax planning to financial planning to insurances to estate planning to risk management to all the investments, and make sure that your financial picture is optimized and as efficient as possible to make sure that your financial resources go to the people and causes you care about most. Appreciate your time. Happy to take some questions if anybody has any, but didn't want to kind of do a full 1 hour lecture. But just wanted to highlight for you, as if you have a business, again, it doesn't need to be a formal structure. It can be a sole proprietorship, but if you have an S Corp, a C Corp, an LLC, these are some of the things that are available to you. And there are many others. One of the key things that we work with, the doctors' practices that we work with, or attorneys' practices. Another concept is a cash balance pension plan that allows you to put a lot more money, up to $300,000 a year, into a retirement plan that can also reduce your overall tax liability. Oh, and David has, kind of this short write-up. This is designed for you to give you some basic information, and go sit down with your accountant before the end of the year, not in January, because in January, there's nothing you can do about it. Well, the only one thing you can do is you can still contribute to an IRA until April 15th, but that's a small benefit. So that's just something that, again, highlights some of the things I've talked about here today. Really something to just get your brain thinking about, that you can now go talk to your accountant about. Hey, are there some other strategies that I should be aware of? And if his answer is make less money, give me a call. I've got plenty of people that I can introduce you to, because that is not the right answer. Also, we do a number of just write-ups like this that we're happy to share with you. If you want to just text Christina back there, she can raise her hand. She coordinates all of these things for me, but her number is 703-634-6267. Again, nobody memorizes numbers anymore. I just push a button and it calls her. Yeah, but you just send her an email. And I think there's other ways to get in contact with us. Our contact information is on here. If you'd like to be added to that, we're happy to do that. But again, it's really about helping you have the information and make the best decisions for you. Thank you.